Alright guys, I bring greetings to each and everyone on this channel. This is Fata FX. Guys, today I'm very happy and I want to show you my simple strategy that I use daily. It is an intraday strategy which is used on the 15 minutes time frame. Okay, you can only go to the lower time frame 1 minute or 3 minutes to check your entry, or just on the same 15 minutes time frame look for candlestick confirmation, then you enter for a sell or a buy. So as you can see, I'm already in a trade right now, and this trade is already moving nicely, as we can see. Good. So without much I talk, let me welcome each and everyone once again, and then those that just check on my channel, if you have not subscribed, kindly do that. Subscribe, and then turn on the notification. Anytime I drop a video, you'll be the first person to be notified. Equally, like the video, share to your friends, also get value from this valuable content of mine. This is a mind-blowing. Okay, it's a mind-blowing. It is based on the smart money concept. The smart money concept has been traded wrongly, and today I've come to show you how to trade it profitably for each and every one. Okay, how does this strategy work? It's so simple that we know the traditional way of identifying market structure, which is a higher high, higher low, higher high, higher low, higher high. We say when market is forming this, we say it is what? It's on an uptrend. Okay, on an uptrend. But this doesn't really depict how the market moved. This move in a straight line, but price does not move in a straight line. Let me show you how a higher high and a higher low is actually forming. Okay. This is how the market moves. You can agree to this or just say no, or just have your own opinion. Alright, so let me digest this simple chart for you to understand what I'm trying to demonstrate here. So as you can see that we are breaking the highs to the upside. Okay, we are breaking the highs to the upside, meaning market is forming what? Higher highs and higher lows, higher highs and higher lows. So anytime it breaks the high, we say we have what? A break of structure. But we have so many highs here. We can see a high here, we can see a high here, a high here, a high here, a high here, high here, high almost everywhere, high here, high here. Which ones are the confirmed higher highs? As we originally know that when market is forming high highs and then the higher lows, we call it higher highs and higher lows. Okay, let me show you. This is a higher high. Let me use something different to depict that for you guys. We have, so the HH stands for higher high, whilst we have HL stand for higher low. Okay, so let me show you which ones are higher highs and which ones are not higher highs. Not every high in the market is called a higher high. That is why we have external structures and what? And internal structures. Today I'm going to simplify everything to your understanding. Okay, I'm going to make everything so simple that it will be so easy for you to identify which direction the market is actually moving and when has the market changed or shifted its structure. So let's go. Now before we have a higher high, before we can confirm a high as a higher high, there must be an internal low taken. Okay, as we can see here, we see that we have an internal low here before price went up to take this high. So this internal low is called an inducement. It is called inducement. So it means price must induce buyers, the impatient buyers, to enter the market early. Later on, then they will induce them. They will take their SLs before the market will start moving to the original direction. And because the price has come to take this lower, this internal low here, it has confirmed this place as a higher high. That means anytime this higher high is taken, then we have what? A break of market structure, which I call it what? BS. Okay, so if you see BS on my chart, it means break of structure or break of market structure. Okay, so let's move on to the same scenario. And now that it has broken this higher high here, we now look for the lowest point the market move before going to break the higher high, and we'll call it what? A higher low. Okay, so the low here is called a higher low. Guys, this is not anything so difficult. Try to understand this. Okay, because the market has gone to break the higher high, it has made this place a higher low. So we'll call here higher high and then a higher low. So likewise, let's see what happened to this place. So people are going to call this break of structure. They will try to buy from this point and they will be taken out, because that is not a break of structure, because the market has not induced anyone to buy. So they must induce people to buy, and then they'll come and take them out, and the market will now move in the original direction. So here we'll call it what? An inducement. I normally use the X to represent an inducement, but in this case, let me use the IDM, which is inducement. Okay, now inducement, it has confirmed this place also a higher high. That means no inducement, no higher high. That is what it means in an uptrend market. And because the price has come down, go up to take this higher high here, we call that one a break of market structure. Simple as that. And we look at the lowest point the market came before going to break the higher high, and we call it what? A higher low, which is right over here. See how simple it is? So easy. Now we have here our higher high, and here our higher low. Good. So the market move in this cycle like that each and every day. So after breaking the higher high, you wait for a price to take an inducement before buying. No inducement, no buy. No internal low, no buy. So I'm going to explain to you the internal structures and then the external structures. So at this point, you can already understand it, that internal structures are the simple pullbacks in an external structure. Okay, so these are the internal structure. They are what we call what? The inducement. Okay, they are what we call what? The inducement. So we can see that. Okay. After market has taken the inducement, the internal low here, it then moves up. It moves up to this point and clear the higher high here. As we can see, it cleared the higher high here, which is our break of structure here. For the uptrend to continue, we have to break a higher high. I hope it is clear that way. Good. So as we can see right over here, we have our higher low here too. Oh, come on. Okay, higher low, higher high. Now you can already see the next higher high. What we can see right now is this low has been taken. This internal low, internal structure has been taken, which is our inducement. That's our inducement. And because this market came down to this point before going up to break it, and since it has gone up to break this higher high here, one thing is the body of the candle must close above the higher high to qualify to become a break of market structure. Good. So we have another boss right. Come on. Another boss right over here. This another boss right over here. That's it. Okay. So in the market, we have two scenarios. We have break of market structure and then change of character. Now, change of character simple means the market is shifting from higher high to start forming what? Lower low. Or in a simple term, changing from uptrend to what? To a downtrend. That is the simple meaning of what? Shock or change of character. So this is our higher low. This is our higher low right over here. Now, where price come down to take this higher low, that is the first time market is breaking a higher low. Then we call it what? Call it a shock or change of character. Change of character. Simple UCH to represent what? Change of character. Because price has come down to take the higher low, it is called change of character. And this time around, see that this is quite different from the internal structure here. This is an external structure that has been taken. So we are now moving from uptrend to what? To a downtrend. And okay, so I'm going to change this. Use this small one to the arrow to show this. But I'm going to show the color. Change the color. Sorry. Yeah, so after breaking the lower high here, sorry, higher low here, the price must go up, take this inducement, drop down, and that's where we can sell from. So as it is coming, it is breaking, also breaking this, forming this, come down, go up like this, and then drop. So as we can see right now, we can see that so we can clearly see that the market has broken the higher low here, and therefore confirming to us that the price has changed from bullish to bearish, and therefore we should start to look for selling opportunities more often than buying opportunities. Clear? So before we sell, there must be an internal high taken before we can sell, and that is it right over here. That is our inducement. You see, market must always induce people to sell early before they will go up, clear them, and then it will start dropping. That is exactly how it moves, and this is what most smart money traders do not know. They do it wrongly. They do it wrongly. Okay, so the next time we are going to break this low, it wouldn't be a shock again. It will now be what? Boss. It will be boss, and boss stands for break of market structure, as you know. Okay, after breaking the structure here, we don't do anything until there is an inducement. And you know what an inducement simply means? Inducement simply, in this sense, it means price forming or going to take an internal high. This time around, we are selling, so we should take an internal high before we sell, not external high. When it takes an external high, it means the trend is trying to change again back to what? To bullish. So as we can see, we have, this was our first internal high before this one was formed. So this high couldn't go up to take it. Okay, and then we had a new internal high forming here. So in this case, this one becomes our internal high. The recent internal high or the recent internal low is what we're interested in. That is our inducement. Even though this one formed first, this one over here formed first, but that is not what we're going to be interested after the new one, a recent one has formed. So the recent one is what we're going to wait for price to take it, and then we'll think of taking a decision based on buying or what, or selling, as we can see. So at this point, this one becomes an engineering liquidity. If there is an order block here which has not been mitigated, then the high here becomes an engineering liquidity. But assuming everything here has been mitigated, then we are going to consider this point as our POI, point of what? Interest, or price of interest. That is where we want to what? Sell from. That's why we want to make a decision of selling. So there is how simple it is. Okay, this is how simple it is. And let me show you this. Anytime an inducement is taken, it confirms here as a lower low. And then after price has come down to take the lower low, we confirm the highest point as what? As a lower high. That means anytime this place is taken, we have a change of character. So because inducement happened here, this one becomes our lower low. Anytime this market at this price here come down to break it, then it qualifies this place as what? As a lower high. It means this point must not be broken. For a selling market to continue, the lower highs must be maintained. Price must not take them. It must not close above them. And for it to continue, the lower lows must keep on breaking. We should keep on breaking what? The lower lows. If here is a lower low, then it must break it like that. Like that. That is the only way our downtrend is going to continue. So we are now going to the chart to show you how I trade each and every day. You can use this strategy to catch an NFP or anything that you think. All right, so let's see how I took my trade on Friday, the recent Friday that just passed, how I caught some trade nicely. It was even shared on my Telegram platform. Okay, so as I mentioned, Telegram platform, if you are not on the Telegram platform, kindly check on the description. You are going to see the link there, join, and then you're going to have access to me and also to our free signals that we share on a daily basis. You can also check there to join our mentorship if you want us to guide you step by step on how to trade profitably. We're going to jump into the chart where I'm going to take you through how I actually trade this using what? The replay mode. Okay. Now before the replay mode, let me quickly show you how I took the NFP on Friday. Okay, how the NFP was caught on Friday. It was caught live on Friday. Yeah, so as we can see, on Friday we're having this break of structure to the upside. Okay, we had a break of structure here to the upside. Boss, why that break of structure? Because we had an inducement right over here. We had an inducement right over here. Okay, so that means we are bullish. We had an inducement right over here. So here the X represents what? An inducement. Okay, where the S is, we have an inducement. So that means we are bullish here. And then suddenly there was a shift in market structure. So it means, yeah, so it means this is our higher low, and then this is our higher high, as we can see. So anytime the higher high is broken, we have a break of market structure. So it means for us to continue going up, we don't have to take the or break the higher low, which is right over here. As soon as this higher low is taken, that means we are bearish. Okay, it means we are bearish. Good. And now see what happened on the Friday. Before the news, a lot of things happened. Okay, so we can see that after the break, market gave us an internal high here. Okay, an internal high that needs to be taken for the price for market to sell. Okay, but before this happened, let's see, sometime after break here, we had a smaller internal high here. Let me show you so you see it clearly. We had another internal high here. Okay, that was taken. So since this was taken, it has qualified this place as a lower low. So anytime this lower low is broken, we have a break of market structure. And let's see what happened. So price sold from this point here, nicely. You saw from this point here, it couldn't break the low here, and then so this is our break of market structure that we are expecting for the market to break before we look for what? A sell. Okay, and then what it means that this low should be broken, but this high shouldn't be what? It shouldn't be broken. This high will be our change of character anytime price break it. So let me even replay for you guys to see what I'm trying to say here. Okay, so let's see what price did. Now we can all see here that as price got to this point, I was expecting to even sell from this point here because the low was taking. So I was expecting to sell from here, but price didn't come to my entry, so I extended it. I really missed this sell at this point, but I got it on the way again. Price came to my POI. So let's see how price move. So when price got to this point, I was thinking that it's going to break it, and then I'll look for another inducement and sell, but that didn't happen. Let's see. So we can see. Now see what happened. Okay. So what did we see here? What we saw here was a break of market structure. As we can see, price broke the low here, which is a break of market structure. Let's see what happened. So we had a bounce here, and we also had a change of character right at the top here. Can we see? So we had, sorry, a change of character rather, not this. We had a change of character here to the upside. So what it means that market is no more going to sell. It only sold once, and then that ends it. So let's see what's happened. Now we have our chalk happening. That means, so we have our inducement here. That is our internal low. Okay. What it means that if this low is taken, then we can look to buy. Why is this an internal low? This red candlestick here is our highest candlestick, and its low has been taken by the green one. So since the highest candlestick low has been taken, then we have a valid pullback. So let's see, and let's see where we can buy from. So on Friday, I put my limit here, waiting nicely for price to tap instead, and then I will go for my buy, because it was NFP on the 1st of September this year. My limit was right over here, waiting nicely, risking about 9 pips. So risking just 9 pips. It was actually 9 pips. Yes, it was at 9 pips, and then the target was right at the top here. Target was in this hidden order block. You know, these wicks are actually hidden order blocks. Okay, so let's see how it played out. So boom, that was it. So that was how the NFP was caught. So you don't have to also break this our higher low now. This is now our higher low. Okay, so if price will come and break here, then it means the trend is now continuing its bullish bearishness. Okay, continue its bearishness. So this is a sweep of liquidity. That's a sweep of liquidity. Okay, so it means this hidden block here really held price, and you could sell from here. Yes, you could sell from here. Anytime there's a sweep of liquidity or sweep of the higher high, what we normally do is we sell, or you can buy. Okay, so let's see how the price move later on. Boom, and then it took this low. That's a choke. It means the selling continuous. So you can see all this. These were trades that I took. These were trades that I took personally, and I'm going to replay for you to see how I took them. Okay, so let's see. Let me delete everything from the chart. Alright, so let's see. So we can see that we had a break of structure here to the downside. We had a break of structure to the downside. Okay, so is this really a break of structure? Let's ask ourselves. Yes, it is, because price took an internal high here, and for taking this internal high, it has confirmed this place over here as what? As a lower low. That means anytime market comes to, or price comes to break it with the candlestick closing below it, we have a break of structure. Okay, the next thing we should do is we should look for what? A selling opportunity. But where can we sell? Let's see where we had our inducement. Now this is not an inducement because the lowest candlestick high wasn't taken. The red candlestick is our lowest candlestick, having its high maintained. Okay, so let's see if we are going to get an internal high as we progress. Okay, so let's see. All right, so as we can see here, this candlestick here is our lowest candlestick, and then its high has been taken. Let's wait for price to take the low. Okay, price must take this low. When price come down to take this low and goes up to take the high here, let me see if I can demonstrate this for you. Okay, it has given us a high here. So what we want to see is that after taking this, price must come down, take this low, go up like this, and then we'll call this one what? As our inducement. Okay, so this is how the inducement is formed. It has formed the higher right, but until it comes to break this low here, it is not yet a high, an internal high. I mean, now we have external and internal. Now this is our external high, this is our internal high. Good. So when this external high is taken, it means the market has changed from bearish to what? To bullish. That is the difference. So let's see how price is going. Boom. So we have our internal high taken right now. Now, as soon as the internal high is taken, which is our inducement, you should be looking for a selling opportunity. So this place we have neat order block with fair value gap or imbalance and even a gap. Okay, which makes this place a valid point for us to sell a POI. So I'm going to put my limit right over here, waiting for price to tap inside, and then we'll see how much we're going to make from this trade. So as we can see, and then this is going to be your target. We have two ways of entry criteria when price tap into a POI. Now POI is a point of interest or price of interest, whatever you want to make a decision of selling or buying. When price gets into this and this your POI, you want to see a chalk in a 1 minute. If I say a chalk, I mean market tap into it, giving something like this, come to take this low, goes up, give us an inducement, and then you sell. Okay, so this is how you can sell on a lower time frame. On a higher time frame, you can use candlestick pattern or candlestick formation, doji, hammer. You can also use the tweezers. You can also use an engulfing, and then any other candlestick pattern that you know. I normally use tweezers and then engulfing patterns to validate my entry. Okay, so let me play it slowly so that we will not miss any move. Let's see. All right, so price has stopped, but it has not filled the gap yet. You can see this, we have this gap here. So let's wait for the gap to be filled now. Let's wait. Good. So the gap has been filled, but let's see a bearish move. We want to see the bears come into the market at this point. Good. Good. So boom. So we can see that the bears have come into the market. We can wait for a short pullback because this is an engulfing pattern. Let's wait for at least an engulfing pattern. Let me see. At least engulf a pullback to this point here. Let's see. Good. So let's see a pullback to this point here. Then we'll enter from there. So let's see. Let me put my this and see whether I'm going to get that. Yes, I think I took it and that was exactly what I did. Good. So we can see, as we can see, so we are inside the trade now. We are in the trade right now as we are speaking. Okay, so right now we are in the trade. Let's see how it goes. Boom. So price is consolidating in the entry. So sometimes you don't have to touch your SL, you don't have to move anything, you don't have to close the trade. Let it hit your SL if possible, and then let it hit your TP if possible. So price is just consolidating in the entry. Okay, now I think the move has started. The move is going well. It is going well. It is going well. Okay, then let's see. We are going to have our trade, our TP hitting. Boom. So this was how the TP was hit. Okay, this was how it was hit. Yeah, let me see if I can show you. So this was the NFP. So this was how it was caught actually. You can see this was the sell. This was the sell. So now we have our break of market structure, as we can see here. We had break of structure with the body closing below it. So let's play and see how it goes. Now we already have so many internal highs. One is here. Another one is also here. We have another one too here. All these ones, they are all internal highs, all right. But the one we are interested in is the one. So now we have the recent internal high, and that's what we are interested in. Okay, that's what we are interested in, the recent internal high. That is going to be our pullback, sorry, our inducement. So let's see whether price will go, whether price is going to move this way or to this way and then drop. Okay, so let's see. So let's see. I'm not sure we are getting that. Let's see. So let's see whether we had a new internal high. This is an equal high, so it is not. Let's see. And one thing is, this is not an internal high because the lowest candlestick high wasn't taken. So this is still our internal high. Okay, so let's see how price is going to take it, and then let's see. Let's go. So boom, the internal high has been taken, and now since inducement has been taken here, Since inducement has been taken here, that means the nearest neat order block can be used. So we have this neat order block here. Okay, we also have this one here. This is also an order block. So I'm going to explain what an order block is, or how to identify a valid order block in the next upcoming video. So if you are now visiting my channel and you've not subscribed yet, I will urge that you subscribe, you turn on the notifications so that anytime I drop a new video, you shall be the first person to be notified. And also try to like all my videos. So let's see where price is going to go. So I'll put my limit here. Sometimes I may not be available to monitor the market, so I need to be using, because of my work. Good. And then also, if this one fail, then it will be my next POI. With risk management, good risk management, you don't have to be afraid of losses. Okay. So sometimes I even pray that this shouldn't hold, but this one should hold, so you can have a very good RR. Okay, risk or reward to risk. Okay, so let's see how price really played out. Let's see. Boom. So I think this was news. This was actually news. And then let's see whether our TP is going to be smashed. TP is going to be smashed. Let's see. Boom. So our TP has been smashed just for following simple strategy and our rules. Okay. Now the next thing, you know what is going to happen. Anytime this high is broken, we have what? A change of character. And if this place is broken, we have what? We have a break of structure. Okay. Here is boss. Then the other one is what? The other one is going to be change of character. That's moving from downtrend to an uptrend. Okay. So let's see how market moved. Let's see how it moved. Let's see. So now this is no more valid. I'll take it out. So at this point, you are not going to do anything. You see, let me give you the range. You can see that the price is moving between this range. So the low has not been broken, the high has also not been broken. We could have thought of side of selling from this point here, but because there is no inducement, we cannot sell. So we just have to wait for inducement to be taken. Either this place is swept or it gives us new inducement. How can it happen? This can go like this, come down like this, take this low here, go up, take this one, tap here, and then we sell. Okay. Or it can also give us this, go here, sweep this point, and then we sell from here. But as it stands now, there's no decision to do to either buy or to either sell. Okay, so let's see what happened. So what I was anticipating for this low to be taken first didn't happen. So let's see. Let's see what will happen. So we shouldn't forget where our chalk is. Okay, this is our chalk. That means if this high is broken with the candlestick body. You see, as I said, if it is swept, if we had a sweep here, then we can sell. Let's see. The sweep really happened, I think. Yeah. Okay, it didn't sweep. It formed an equal high over there. There is a little sweep, I think. There is a little sweep. Yeah, there is a sweep of liquidity. So there is a sweep of liquidity. So if there's a sweep of liquidity, what you can do is to sell. So we could have sold from that point, because there is a sweep, you could have sold, and then your stop loss above here, then you target the last low here. Let's see whether that's gonna happen. And this will be your TP. Okay, this would have been a very nice reward to risk. So let's see, boom. So that didn't happen. You may be taken out if you should take this trade. That's okay. It is okay to lose. Okay, it is not a crime to lose. So what we have now is a change of character. It means we are no more going to be looking for sales until otherwise. Now we're going to be looking for what? Buying opportunity. So what we can see here right now is that there is an internal low taking here. That means there is a change of character. Okay, and then when price come down somewhere here, we can actually we can buy. Sorry for that. But at this point, let's say we are going to have an inducement. And what is going to be our inducement? Under there's a break of structure here, we have to get an inducement. Okay, the lowest candlestick point has been taken here, so we can, if price sweep here, we can buy. But let's see what happened. All right, none of that happened. None of that happened. So the next time we are going to buy is here. We are going to buy if this low is swept. Please take note of this. It is not this. This is not the low. Okay, you realize that this couldn't break this high here, so we're not interested in this low. It is this low we're interested in. Okay, so this is going to be our low. Let's see. Okay. So still no inducement. So we don't have any inducement here because they are equal. The lows are equal. The highest candlestick low wasn't taken, so no inducement, no internal low. That's not a pullback. Okay, in my next video too, I'm going to talk about how to identify valid pullbacks. Okay, how to identify these valid internal lows and internal highs, and that is going to help you a lot. So stay tuned, and then make sure you subscribe to the channel, and also join my Telegram channel. Join my Telegram channel. If you have any question, you can leave it in the comment section. I'm going to attend to every question. So let's see what we have. Good. So I think I was in this trade. Yeah, I was actually in this trade. I'm going to show it to you guys. So I was actually in this trade. Now you can see that the inducement has been taken. Price just swap it and then right into this neat order block here. I took this trade, and that was how I caught the NFP on GBP USD. Okay. So that's it. That is the target was right somewhere here. Yeah, somewhere here. Let's play out and see how it goes. Okay, good. So that was it, guys. That's exactly that for GBP USD. Good. And then now that this low here has been taken, that means we are shifting from buying to sell again. So that's it, guys. Stay tuned to my channel. Stay tuned to my channel. Make sure you give a subscribe, show some love, leave your comment in the comment section, and I'm going to attend to each and every comment. Okay, so that's it. Right now I'm thinking of selling, and I'm in the trade right as we are speaking. Good. So you can see that we already have a chalk for a selling, for a sell. Good. So all right, so let me give this as a signal. Anyone who wants can take it. I'm looking to sell from this point. Looking to sell from this point. Why do I want to sell here? As we can see, we have taken an inducement already. So per my strategy, I'm good to sell from this order block. Okay, so I'm good to sell from this order block here. Stop loss could be somewhere here or just above here. Then you target the low. Target this low here. Yeah, at least 1:5.7. It's not too bad. Market has no close. Today is Monday, and then the market is so slow. It is so slow, guys. So slow. So let's see how it goes by tomorrow. Yeah. Let's see how it goes. Good. So price is surely going to come to this, and then if it is going to break it, that is onto it, and I'm sure it's going to break it because this is an ascending channel which is going to which suggests a downtrend. Yeah, so I don't actually trade it, but I use it for scalping in a lower time frame, like 3 minutes. I'm going to make a video on that one too. Stay tuned, guys. So peace.